Okay. Okay. Getting everything situated. Hope everybody's having a productive day. This is pretty much strategies on how to profit on a market crash. You got everybody pretty much speculating when it comes to what the market would do. People asking me what you think the market's going to do. To be honest, nobody doesn't have a crystal ball. But these inverse ETFs that are 3x, 2x leverage can be able to have you benefit off of the crash. A lot of people get destroyed because they're not properly hedged when it comes to their investments. When it comes from a crash, not crash, crash or non-crash, or pretty much a flash crash where it may crash for 2 days consistently, but it can go back up. Consistent downturns. A bull run is usually longer than a bear. A bear is usually 90 days out of the year. So when it comes from a standpoint of how to benefit from it, the Dow Jones, we're going to look at the Dow Jones. So I'm going to share my screen because we're going to see what the Dow Jones is doing as we speak. Okay, share my screen. Okay. For anybody that's coming in, please like, share, and subscribe. And if anybody wants to join the panel, it is open panel. If anybody needs to get in contact with me, creditbuilder475@gmail.com. For all the people that's coming in, like the video. And it is a open panel. Feel free and definitely ask questions. I'm going to share my screen and we're going to look at the Dow Jones. Then I'm going to give y'all a stock that benefits from the Dow Jones crash. And so really, I just need y'all to benefit from the crash. So when the crash hits, you have enough cash liquidity to buy those dips. So literally, you make money off the dip and you can be able to double, quadruple your stock gains by buying those dips. Similar to the situation that happened in March of 2020 when lockdown pretty much happened. People that had inverse ETFs that bet against the stock market won very big. They won extremely big to the point where they doubled and tripled their profits off the strength of a crash. So let me share my screen. Okay. The Dow opened up a little high, did a little flash crash, then vertically went up. And right now it's consolidating. Dow futures, Apple. Okay, so Apple iPhone chip makers nearly buy points to a rally. So when I told y'all about that, it was TSM. TSM is pretty much the biggest semiconductor chip maker. Now they're saying that Tesla's stock price is at risk, which we'll see. So it started off the day at 685, took a crash, rose up, took another crash, consolidating downward. But TSM is the manufacturer when it comes to these chips. So say if you want to bet against technology, if you think technology is going to crash, then I have a play for y'all when it comes to that as well. TSM at a dip. Everybody should always buy the dips because this is like the biggest semiconductor company where all of our chips comes from Taiwan. All of our semiconductors come from Taiwan. This is from 1 year chart, 5-year chart. So in 2019, it was about $40 a stock. So pretty much for the past 5 years, 350% increase. And TSM, Taiwan Semiconductors, does business when it comes to GM, Ford, Apple. So anything that comes from anything is literally coming from Taiwan. So this is this is the tech bear. The tech bear is down. Well, the tech bull is down. And when the bull is down, the bear is up. Always remember that. When the bull is down, the bear is up. See how this managed to skyrocket? This is the bull versus the bear. Bull, bear. And this could be $30 easily if a big tech crash happens. Then we got Bitcoin. You can make money with Bitcoin, or you can make money betting against Bitcoin. So you see this is 33.4. This is the inverse, and it's up. BITI, Beta Pro inverse Bitcoin ETF. So this is up while Bitcoin is down right now. CYBL, I told y'all about this when it comes to the military contracts, national defense contract with the National Guard, Army contract coming up on the way. I'm holding on to this bad boy until it's $1. So this is definitely long-term hold. It has the government contract, so that's why I feel comfortable in holding something like that for that long. Yeah, cool, Rob. I received it. I appreciate you, cool, Rob. Definitely appreciate you. Definitely appreciate you. Definitely appreciate you, cool, Rob. Anybody that's coming in, please like the video. Please share the video. Please feel free to even join in the conversation. This is pretty much me giving you a complete strategy on how to profit on a stock market downturn. Seems like everybody that's pretty much watching either Mad Money or a lot of people on MSNBC Money or CNBC Money is pretty much just reacting and not creating a reasonable solution to make sure that when people do have money in the stock market, they can be able to make money off the downturn, whilst either selling off the situation that's on the upside to put money on the downturn, or just hedge it where you got money that can make money off the stock market rise, can make money off the stock market downfall, and have enough cash set aside to be able to leverage it. Because with a bull 3x, if the technologies are up, you get 3x the money. So whatever, if you put in $50 in here, if you put $50 into a 3x bull, so 3x, when you see 3x, this is leverage. So that means if you put in 154 for each dollar, that will be 3x. So 150 will be 450. 450 can be 1200. So this is the leverage method. So pretty much this is literally all diversified. When it comes to ETFs, you're instantly diversified because it's a bundle of stocks that's in one. That's why it compiles this Direxion. But you can see in the past month, the technologies bull up 21%. And say if technology crashes, which technology hasn't done so well so far today, you can be able to benefit from it. And it's only $5 a share. So these can go up to $30, $40 a share. Say if we have a real market crash, then this can be $40, $50. But when the market recovers, it'll go back down to this price or lower if it's really booming. If it's really booming, then yes. Then here's your short squeeze plays. I told you about Clove. Clove, you got a lot of people shorting it. And when people short it, it's a potential for a short squeeze because they got to buy back into those shares in order to avoid unlimited losses. So when I told you about Clove, it was a month ago. For the people that booked the consultation with me, they got it a month ago. For the people on the channel, I told you about this 2 weeks ago. 2 weeks ago. So around 2 weeks ago or a week when I mentioned this to you. So all the people that do call options, they made money on this. People that do call options, they pretty much set their call to $14, $15 and have the expiration date probably in 3-4 months, which I think it can go up easily like that. So Clove is a AMC situation. Then we're going to see what AMC is doing as well. This is the popular short squeeze. Everybody that's on either Wall Street Bets, StockTwits, Twitter, they're all pretty much trying to speculate on what is this price is going to be. Is it going to blow up big where it can go from 56 to 400 like everybody's saying? I think it can be 120. I think it could be 120. So, and pretty much the gist of what I'm trying to get through to everybody is inverse ETFs, 3x leverage, the bear 3x. You can be able to make money off of those due to the fact of the downturn. Because the downturn can happen if interest rates skyrocket up, the Biden-Harris administration raises taxes, or 3, inflation kicks everybody's ass, and it pretty much leads a how can I put this? It could put a black swan event, a black swan event where pretty much people don't know where to be able to go when it comes to scenarios like this. So you have that first short squeeze, pretty much flatline for the longest, then burst to what we see right now, and it's consolidated. So pretty much this squiggly line sideways, it's called consolidation. That would be the stock term. People think it could go to 400. I personally think it can. It could be able to hit certain strides. I think people should just look at what is their risk tolerance when it comes to their portfolio. What do they want to see inside their portfolio? Try to figure out what is necessary when it comes to certain segments of that. And BITI would be something for, how can I say, you would pretty much set aside money. If you have money in Bitcoin, you would put money in your Bitcoins, then put money into this. So when it goes down, crashing down, say if it crashes bad, then you can be able to make money off of it. So 3x bear, because 3x bear, 3x bull, if you have both of those, you can be able to make money regardless if it goes up or down. And this is used to short the SP 500. So this is SPXS. So that's SPXS. So when the market is up, this is down. When the market is down, this is up. So it's literally on the flip side. So this is pretty much the stocks that will benefit that you need to use. So when you're seeing this, it's because the market is going up. So when you see this crashing 40%, that means the market is up 80%. Market is up 80% because any type of gains or losses, if you lose money, if you lose 30%, then you're going to need 70% to be able to make up those gains back, and 140% to literally double your money. But this right here is a strategy for people to use when the market crashes. So this is literally a tool for you to be able to have in your portfolio, Direxion. This is the daily hold. So you can hold this daily. I preferably suggest the longest would be a week. But if you're going to hold on to this a week, you're going to have to buy more and more of it every day that you hold so you can benefit from a crash market, from a stock market crash. So this is the SP 500. I think the SP 500 is literally something of substance when it comes to getting some daily gains. But the SP 500 bear, if you put in 150, once again it'll be 450. You cash out the 450. So because when you cash out, that means you made money off of the market crash. And when you cash out, you have money to be able to buy the dip. And you buy the dip, and that's where you can 3, 4, 5x the money. So you literally use this for the crash. And when everything is crashing, everything's extremely cheap, everything's oversold, people are pretty much saying that I don't want to touch it. You can be able to buy the dip. And when it does increase, then your portfolio can be strong and you can be able to outbeat the competition when it comes to metrics like this. So always look at your strategy on beating the market, due to the fact that a lot of people is either trying to get you in silver. A lot of people are just saying, well, Bitcoin is enough to be able to hedge, which Bitcoin can be enough. It can be a great hedge. But in order to be able to use something like, how can I put it? How can people be able to benefit from it is inverse ETFs, credit default swaps, but that's for big corporations. If anybody watched The Big Short can pretty much give you an understanding of how people bet and short the markets. How people bet and short the markets. TSM for the semiconductors. TSM for the semiconductors. That could be $400 a share easily. So Walmart was yesterday's losers. People was talking about Home Depot. I've been told you about Home Depot. This is news from 2 years ago. COVID fears shakes up market rally. So that's why you got inverse ETF. So when people are fearful, when the corporations are pretty much saying that, the hedge funds pretty much scared of the COVID fears, this is where the inverse ETFs can be able to help you make money on the downturn. Because I'm going to keep on telling you about TECL. That's the bull, which is up 21% this month, down today. But the bear, you can make money off the downturn. So with the tech crashing, this is up. With tech crashing, this is up. You stock up a lot of shares. You do fixed dollar cost averaging, like I said. And fixed dollar cost averaging means if you have a limited budget, you can set aside $50 a week, $50 every 2 weeks, $50 every month. But do it from a time period where you can accumulate shares. So these are the inverses. And I got plenty of inverses. We went over the inverse of real estate. So people, if you think the real estate market is going to crash, there's the inverse when it comes to that too. You benefit from those inverses as well. You benefit from those situations and you can pretty much kind of gauge what you need. That is funny. You owe me cash for the crap. See, okay. Okay, so you're gonna do me like 50? So you're gonna do me like 50 cents? Everybody owe you money now? Okay. Okay, respect to you. Respect everybody that's coming in. Please like, share, subscribe. Anybody wants to come in, it is an open panel. If anybody needs to get in contact with me, creditbuilder475@gmail.com. You can be able to get a free list and I can be able to help you get more informed. Everybody that's coming in, pretty much strategies on how to benefit from a stock market crash. You got a lot of people saying, I don't know if it's going to go up, when it's going to crash, when it's going to crash. You got people pretty much reacting and crying and pacing instead of actually calming down and actually sitting down and figuring out, okay, what is the market movers? Everybody knows that if technology has a bad day, you can benefit from it. But with news correlating with tech, if bond yields is down, that pretty much means the stock market can roar. If bond yields are up, tech stocks get crushed. And when I told y'all about I think TESC, no, CS, TECS, that is the bear. So you make money when bond yields are up, technology getting crushed. You can make money because the bear is when it's down. 3x your money, $50 can turn to $150. Cash out the $150. Pretty much put it in either other stocks that are on the upside, so you can literally make money on the crash, buy the dip, make money off the rise, sell off the motherfucker, and put money on the bear again. You can literally do this, rinse and repeat. Because the Direxion Daily Technology Bear is pretty much a strategy where when this shit goes upside down, this will be from $5 probably to $40. Because this is relatively new. They create this derivative so people can benefit from the crash. Same thing with the BITI. So let me show y'all BITI. Because Bitcoin right now is at a dip, 33.4. So BITI. So any type of inverses when it comes to this, please put some money aside, because people are saying that, we here for the rush. Be there for the bull rush, but also be there for when it's down, because Bitcoin is down, but this one is up. This makes money off the flip side. So that's BITI, Beta Pro, Inverse Bitcoin ETF. So let's look at some more inverses. Inverse Real Estate ETF. So these are like 3 inverse ETFs. So if the real estate market crashes, where everybody's saying that the property prices is going to go down and start crumbling, pardon me, this is the list specifically where you can be able to make money, put some money aside. And when that thing does crumble, you can be able to make a lot of money off of it crumbling. So let me do something real quick. Oh, man. Okay. So this is the Direxion Asset Management Inverse. So this is literally the 4 inverses. ETFs is pretty much something where it's instantly diversified. This is pretty much the website that I see it at. So I'm going to copy and paste the link. So it's a 3x bear. So that means if you put in $20, it could be 60 when the market is crashing. When the real estate market is crashing, these are up. So say if pretty much property houses that were 350,000 crashes to 280. The list that I'm going to copy and paste and send the link to y'all as a source that y'all can be able to verify, read yourself. This is the list. Prince Pierre, respect to you. Everybody that's coming in. This is pretty much something where I could be able to help strategize for y'all when it comes to any type of market crash of any industry, because technology stocks can literally bring the whole market down by itself. Real estate market can bring the whole market down by itself. So literally, this economy is pretty much a lot of variables, a lot of moving parts. So these are the stocks where the moving parts, say if the moving parts is busted, something in the system is pretty much has been wired around where it's not making any money. These are the stocks that literally you can be able to buy and hold daily, buy and hold weekly, buy and hold for a couple of months. But you got to be safe and careful about these, because you can literally turn it from 3x to boom, and it can literally crumble down in your account. So if it's up 3x, then you up 3x. If it's down, then you lost 3x. So this is why leverage is pretty much something where you got to do it with caution. You got to pretty much do your due diligence where you make money off the bull and the bear. So that's why I'm gonna type it in the chat. Direxion bull and bear buys. So you buy the bull and the bear on each industry so you can stay diversified and you can be able to profit off of upside and downturn. You can do the 2x where if you put 50 in, it could be 100. You can do the 3x leverage where every 50 can be 150 when the market is crashing. You can be able to make money off the 3x. If the market is up, that's where you buy the bull. And the bull will take you to 3x as well. So I'm just trying to make sure that everybody is prepared so that when they say real deal, what happened, people can't tell me that, oh, you didn't give me a strategy. You didn't be able to at least sit down with me when it comes to what's going on with the market. With this situation and strategy, you can be able to be more prepared. You can be able to do what you need to do when it comes to your due diligence. I'm here with you. So tech, real estate, let's do small caps. So I got everybody pretty much on the pink sheets. Everybody's pretty much informed when it comes to the penny stocks, weed penny stocks, tech penny stocks, lithium. This Build Back Better plan, people are going to make a lot of money on this situation. So my clients and people that are watching and listening into me, they'll be able to make a lot of money when it comes to that segment and scenario as well. So I just have to prepare people with the mindset. If it do crash, you do got a strategy when it comes to the bear market, because the bear market is usually shorter than a bull market. So that means when people are losing money, you can make 3 or 4 days straight of where your Direxion bear is literally giving you 3x leverage, compounding on your money. Every time that when the market is down, when the Dow Jones is down not 3,000 points, but 300 points a day, you can make money off the situation, take the profits that you get, pull it into either some penny stocks where you can turn 10 into a 5x return off of a government contract or a merger coming in with the penny stocks. Then you can buy the bear. Then you can buy the bull. So you use the bear profits of you making money off the crash to put money on the bear, on the bull. So when it's a bull market again, you can make 4 or 5x the money, probably making 150 into 450 into hopefully $2,000-$3,000. Because we got to be able to make sure that you understand that everything has a flip and a downside, upside, downside. It's about staying diversified, understanding how to rebalance your portfolio. And what rebalancing means is if you got 5 stocks that are up 20% of the day, you probably sell either 60 to 70% of it, hold 30%. But you got to take those gains and you got to be able to pull it into another segment of the market. So you got Bitcoin that's down. People should buy the dip in Bitcoin and also buy the bear as well. So you could be able to make money off of buying everything cheap, and you can make money off of pretty much the downturn. So it's a derivative. So when they create these inverses, it's a derivative specifically designed for people to be able to make money while everybody else is crashing. So this is literally the strategy that hedge fund corporations do. You got Mark Cuban that pretty much did it when it came to Yahoo stock years ago. When Yahoo stock was pretty much crashing, he bought the share fully, and he also put a couple put options, then set up a call option just in case when it does rise up, he can make money off of it as well. So literally, inverse ETFs are insurance bonds of the stock market. They are an insurance policy just in case if it does go topsy-turvy, you're well hedged, you're well diversified, you pretty much got a strategy, you pretty much understand if this thing does come crumbling down, I'm ready. Because the only thing I need y'all to be willing to do is to research what is your comfortability rate when it comes to this, because you got a lot of things that are either in a bubble or about to burst. In the market, we got a car loan bubble. a car auto loan bubble. So pretty much people need to figure out how you can be able to benefit from that. If the bubble bursts, you could be able to get certain assets for a discount. Same thing when it comes to real estate as well. But when it comes to the stock market, these inverse ETFs that I put in the chat for y'all, this is the link source. So everybody needs to do some research when it comes to inverse. Anything that's inverse, you profit off of a downturn. You bet against the market. You would use these, you would pretty much either hold it for daily, weekly, and if you're going to do monthly, then you're just going to pretty much have the mindset where it's down now. It will be down now, but when the market crash, these inverse real estate ETFs that I put you on the link that you're seeing right now, and for people that's coming in, please like the video. You could be able to benefit the most off of this downturn because the downturn hits everybody differently. Definitely hits everybody differently. People either don't even have a well thought out strategy where they don't even know what to do. They pretty much just put money into the market that don't understand what an inverse is. And unfortunately, there are the pigs that get slaughtered. Because I gave y'all the Bitcoin inverse ETF, BITI, so you can make money and profit off of a Bitcoin crash. I gave y'all the real estate ETF so y'all could benefit from a real estate crash as well. SP 500, if that thing crashes, same thing as well. Dow Jones inverse ETF, that is SDOG. So when literally the market has a dog day, you can be able to profit off of that. CYBL is pretty much my penny stock, pretty much of the year, because that has all the government contracts that's under a penny. I'm gonna hold on to that, probably short term to 15 cents. And when it does go long term, I'm hold on to it till it's $1. So strategies to benefit from the stock market is also gold and silver. Gold and silver ETFs as well for the people that are either not catching my drift when it comes to this Direxion bull and bear 2x, 3x. Something simple would be gold, silver, rare earth materials, minerals, situations like that. I got a lot of ghost watchers, man. I got a lot of ghost watchers. So CZNI, I'm going to type that into the chat. CZNI. That is another play that I need y'all to research as well. You can get on TD Ameritrade. TD Ameritrade could be able to get you a lot of plays that I tell y'all and reference y'all. So y'all can be informed. TD Ameritrade. Oh, Ameritrade. And for all the Robinhood traders, CLOV, you can be able to buy that on there as well. If it short squeezes to $12 to $40, then y'all pretty much made money. That'll be a safe way to cash out. That'd be the best method to cash out. So you can be able to benefit on that. So that's CYBL. CZNI. I got another one for you. Hold on, I got another one for you. Oh yeah, and one of my stocks that was top gainers, MRIN, is up 60%. So we're gonna look at that. So I pretty much got a notification on my phone when it comes to a stock play. But please don't forget these. These are inverses. You can be able to make considerable amount of money on these situations. So let me do this real quick. Okay. So the top gainer, MRIN. I told y'all about this in the stock list. Up 60% today. Had a great day today. 5-day chart y'all can see. So whoever that put $100 into this made around $60 today. And if people made $60 today off of the stock situation I told y'all about, sell, 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 get back into it in a cheaper route, because it's gonna take a dip. People are gonna take profits, and when people take profits, it's going to dip. Buy back into it and see what it does. I don't see what's wrong with this. I don't see what's wrong with this. Up 60%. That's ticker MRIN. Up 60. So the market cap is 187 million. No. I think I'm reading this kind of wrong. But I thought it was gonna be from $50 easily. So literally from 1 month, it's up 1,000%. It's up 1,000%, y'all. So it was $2 when I told y'all this. Now it's $17 a share. It was $2. Now it's $17 a share. So people got to pay attention when it comes to these call alerts, man. These call alerts definitely coming in clutch for people. I always tell people, if it does have a huge run up like that, you buy the dip. You wait for it to come crashing down. Or if you're an advanced trader or you want to be an advanced trader, you would short the stock so you can make money off its downturn and buy the dip where it's literally at the ground floor, where you have nothing but upside available for you. So people just need to get people that understand that they just got to understand of the market flow. They can win. They could win. That is up 60%. Okay. Okay, so if anybody wants to come up, open panel. I'm opening up the panel. I need more dialogue. I need more people that ask certain questions when it comes to what to do on a strategy of profiting off of a downturn, off of a market crash, without doing margin account. Because margin accounts you can profit, but boy, margin accounts is so tough when it comes to timing and pricing it correctly, because it can literally go lower than what your amount is, because you got people like what's his name? He met up with Diddy. His name is, hold on, it's literally on the top of my head. I literally forgot his name, but he's a avid trader, where when he tried to bet against the stock market, it wasn't even low enough. He thought it was just going to go from 29,000 to 22,000. It literally went from 29,000 from March of 2020 to 15, 16,000 range. So he was literally not deep enough. So when it comes to margin trading, that's high risk. When it comes to betting against the market, it's profitable, but you got to get your price target correctly. But the inverse ETFs that I showed y'all, and I keep preaching to y'all, BITI, you can make money off of the stock, the benefit of a Bitcoin crash going down. And with technology stocks, TES, I keep saying SC, but TECS, you can benefit off of a technology stocks crash, because technology stocks, they crash, the whole Dow Jones is going to be bloody shot red. So for everybody that's coming in, respect to y'all. I'm gonna have to probably end this one short. But for all the people that's coming in, I respect everybody. Only why I made this one short is I need people to be able to look back at the replay, write down everything, because it can't be 2 or 3 hour live stream when it comes to a strategy like this, because this is definitely needed. But if anybody wants to join in, y'all can join it. I'll be able to talk to y'all for a minute, but other than that, I just need everybody just to be well prepared when it comes to your method of what is needed. And what I think is needed for people is to hedge their bets. Stop relying on a upbeat, a uptick of the market. Always make money off the downfall of other people's problems when it comes to the stock market, preferably. But we got to make sure your inverse ETFs can make money off of a weed crash, a real estate crash, a car auto loan bubble. You got to make money off of a situation, off of Bitcoin crashing. You can make money off the rise, but if it's crashing, do not sit there and just have your hands pretty much tied and say, well, I don't know what to do. I can't do anything. Bullshit. Inverse ETFs, I gave y'all the links to it. So the inverse ETF link that I gave y'all have 3 pretty much important sub niches in real estate. Y'all have the list. If anybody needs to get in contact with me, Credit Builder 475 at gmail.com. Credit Builder 475 at gmail.com for any consultations, or anybody that wants to ask me a question or wants to be able to get a free stock list. You can be able to book a session with me. I'll give you a free stock list, and whenever who is ready, they can be able to get stock list benefits. They can be able to get personal grants, business grants. I can be able to help them when it comes to their business situation. I respect everybody that shows me love. All the people that booked the consultation with me, they definitely get first top line treatment. I just appreciate everybody that has the willingness to be able to invest in themselves, do some research, and also benefit from it, because people are literally lost. People don't know what to do when it comes to these situations. Don't even got a well thought out strategy, let alone something to benefit from a downturn. So this is my email. This is my email. If anybody wants to support, $ Mr. Perfect 23G. I might have a real estate panel later on, so we can be able to have an open panel in real estate. We can be able to chop it up when it comes to either any type of strategies, any type of plans, methods that you either think that can work. I go over all the real estate markets in America and globally, because we looked at a couple Caribbean properties that looked like that it could be 5 million, but it's 700,000. So people just need to be more diversified when it comes to world events like that, because with world events, everything happens where if pretty much commodities, because they talk about inflation, they talk about food prices going up. I told you about Walmart. I told you about food stocks. Told you about distribution companies, food manufacturing companies. They benefit the most off of high food prices. Retail benefits the most. Walmart benefited the most. Walmart benefit the most off of a lot of things. Stimulus checks, food prices going up. So we just got to understand that there's so many segments in the market. Oh yeah, and another thing, I didn't tell y'all this. I've been leading you off to failure, but it's shipping stocks are the highest yield in the market. So shipping stocks, you got SHIP. Trucking stocks, so anything that's in transportation benefit the most. The green energy plays benefit the most. HAZH is a buy. Potential merger coming in the woodwork. Ticker APTY. It's a stable coin that is backed by the US dollar and gold. The white paper for Spirit is ready and has been posted in their website. So that's APTY. So all my crypto buffs, that is something where it's literally backed by the US dollar and gold. And that ticker would be APTY. APT Systems is the company. For all the people that are crypto buffs, those are one play. IGEX is another one. IGEX is another play. ISWH is another. CYBL is another play. Keep telling y'all about Verb, VERB. You can either short these stocks or wait until it's a downturn, but I think people should study on how to short these things so you can make money before it turns into a dip. So you can be able to make money off of shorting it and buy the dip as well with full shares. You can literally buy full shares. And if people need fractional shares, they'd be like, well, real deal, I need something where I could be able to buy fractional shares. M1 Finance. M1 Finance is a good source when it comes to buying fractional shares, which you need. You can be able to stock up when it comes to situations like that, where if you can't buy certain plays because if it's either too expensive or you're trying to leverage your money, where if you got $500, you're not trying to put the full 500 in, you put 75 in the fractional share situation and leverage the rest to either put into inverses or bull 3x. Because if it's a bull market, if this July has a whole entire bull market, then the 3x technology stocks is a good play. The 3x SPY 500 SP 500 is another good play as well. So another situation is WSRC. WSRC. MJWL. LWLG. So it's LWLG. HPIL. And WSRC has a $2.3 billion net income, which would be fourth and the highest ranking in net income in U.S. gold as composition pretty much has net income of $2.46 billion. So literally you have WSRC can be able to benefit from that. Potential is crazy. I think people should just be able to focus on either gold or silver if what I said and mentioned is pretty much either too hard or too complex or you still don't understand it. Gold ETFs, silver, because they got a gold bull as well. So they got a gold bull, a gold bear. So you need to benefit off of both sides. So this is literally the term of hedging your bets. EFIR. So that's EFIR. So I'm gonna type all this in the chat for y'all. PBYA. PBYA is another situation. EEGI is a longer term hold. AITX. PBYA. WSRC. MDMP. Then DPLS is another long-term hold. So pretty much the OTC markets is something where if you want to benefit from a OTC small cap crash, I got a strategy for that as well. So you got to benefit from the upside and downside. So I'm going to show my screen. We're going to look at that as well. Okay. Small cap inverse. reverse. Give me one moment. Okay, so that's TNA is the bull, TZA is the bear. So let me copy this for y'all. So I copied, paste the situation. I'm gonna share my screen and we're gonna look at both of these. So these are the ones you can benefit. So if y'all pretty much follow my advice when it comes to this, this is where you can be able to seek daily profits from the bear and the bull. If you're going bull, have $50 in the bull and have $80 in the bear. So if it goes up, you're up 150. If the market crashes down, you can be up 240. And you have a net profit from both, from either the bear or the bull, of $80. So that means $80 can be able to be 240 on the bear. You made money off of its downturn. You get that daily profit, you cash out, you buy the dips. So this is the small cap bull, TNA, the small cap bear, TZA. And I'm gonna share my screen, and that's 3x leverage. So that means for every dollar that you put in can be 3 back. So you literally got to study what the market is doing when it comes to these situations. You can put whatever your comfortability rate is at. So I'm gonna share my screen and we're gonna look at TNA. We're gonna look at TNA, and this is open panel. So anybody wants to come up, TNA. TNA is 100. TZA, we're going to look at that as well. But you can be able to get 3x if you put in 100. It keeps going up. You're up 300. Cash out. Put your money in TZA to benefit from the sell-off, because a huge sell-off happens when you got a stock that goes up how can I put it? Exponentially grow higher than pretty much previous day highs. So, this is the bear. So if you put in 30 and the market is crashing, you'll be up 90. So I told y'all about the bear and the bull. And this is on small caps. So this is from all the small cap situations that I told y'all about. You can make money off of it crashing. You can make money off of it rising. You can actually double your money off of it rising and make money off of it crashing. So this shows you that pretty much the small caps has been in good standing, because it hasn't have a huge run up. It may have time periods where it goes up vertically, but when it goes ferociously up like that, you make lots of money. So when it has this dip and it has the increase right here, people should sell off when the chart mirrors like that, because it's 3x the money. It's 3x the money. People should always focus on how to make money on a downturn. So that's the term. Direxion, small cap bull, TNA, bear, TZA. So the bull is more expensive because for now, small caps has been running. Small caps, actually, OTC stocks and small caps has had the best year this year. And you can make money off of the bear, saying if next year, pretty much small caps don't do anything, you can make money off of the bear. So any type of questions, people can definitely ask me. If anybody wants to come up on the panel, feel free. Please like the video though. Please like, share, and subscribe. And please also, if you need my services or if you need the free stocks list, creditbuilder475 at gmail.com. Creditbuilder475 at gmail.com. So I pretty much gave you all the strategy on how to benefit off of a stock market crash. You can make money off of a flash crash, because if the Fed chairman say we're going to raise interest rates, that's bearish news. So whoever that got the inverses pretty much put money into that when you hear news of negative, because a lot of the stock market is based off of news, then earnings reports, then funding, etc., etc. But for people that's coming in, I definitely appreciate y'all. Anybody wants to join the panel, I will put the link in the chat. CBDL is another play. That's a CBD oil situation. KULR. That's another situation. And what else? What else? I know I got a couple more plays for y'all, because before I leave, I need to get y'all informed. Get y'all informed. I know I'm forgetting something. I know I'm forgetting something. I know I'm forgetting a couple of things. I know I'm forgetting a couple of things. RETC. 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 So pretty much that's the whole gist of this stream. I definitely appreciate all of y'all. I'm just trying to be able to have a strategy lined up. And this ain't going to be the only video that I'm going to do when it comes to strategies on profiting off of a stock market crash. Because a lot of people ain't even talking about this. A lot of people think it's going to go up and up and up and up, up and up and up and up, and pretty much not protecting their audience or their investors when it comes to a downside. So the inverse ETFs, once again, is an insurance policy on your stocks, on your stock holdings. So say if it's a bloody market where Dow Jones is down 400%, things is down 30-40% on a lot of people's stocks, the inverses will help you benefit from it. So when people are losing, you're winning, and you can be able to buy the dips and to be able to make 3-4 extra money because people are losing, and you profit off of people's losses because you knew what an inverse ETF was. You knew what credit default swaps were. You knew what credit defaults is. You watched the movie The Big Short. You pay attention on what short selling is, where you pretty much sell high and buy low. That's pretty much the method of short selling. You sell high and you buy low, and money that is in between, you profit off of the difference of in between money. When it comes to a lot of stocks, you buy low and you sell high. But if it's already high, you sell high and you buy low. You do that when it comes to inverses. You do that when it comes to put options. You do that when it comes to anything of Bitcoin, crypto, Forex, currency trading, coins of gold, silver, palladium. You can't help but to go right. So these strategies is something that hedge fund corporations use, avid investors use, people that just want to protect the downside use, because they know that, everything doesn't come up, doesn't stay up forever. So this is Real Deal Financial. I am your host. I hope everybody has a blessed and productive day. If I feel good enough for it, I will do a real estate panel later on. Hopefully we can get more people to be able to join the panel so we can be able to talk about people real estate markets. I appreciate everybody. RDF out.